All right, let's begin. Um, Good afternoon, everyone. Most of you know me because many of you attended the first webinar, which is the fundamentals of bank stablecoin partnerships, where we talked about the revenue models for banks working with stablecoin startups, what startups and bank expect from each other, and then the common partnership pitfalls. For those who don't know me, I am the executive vice president of banking at Sphere Labs. And then I was previously the senior director of financial partnerships at Circle and the on and off ramps partnerships lead at Facebook's Calibra. So, very briefly, Sphere Labs is a stablecoin orchestration platform on one side, and then private permission blockchain network on the other. So think of it as a company similar to Bridge on one side, and then a company similar to Ripple but privacy enabled on the other, combined into one umbrella. We are looking for more US banks. So if you're interested, please contact me after the webinar. And now it's my pleasure to introduce Geisa. Geisa and I knew each other from our previous roles. She was an executive director at JP Morgan Chase and the Senior Vice President of Digital Product Management at Customers Bank. And now I leave the floor to Geisa.
Great. Thank you, Lindsay. And hi, everyone. Happy you all could make it for this conversation. As Lindsay mentioned, I've been in the finance world for over 11 years. I worked at American Express. I was head of product at Customers Bank. And also my most recent role, I was at JP Morgan Chase and supply chain finance products group. So what I wanted to share with you today is just a general overview of things to think about and look out for as if your bank is thinking about partnering with stablecoin provider or any provider really in the digital asset industry. So how to enter that space as a bank. And I will share my screen and guide you through my presentation. Please let me know if you all can see it before I proceed. Yes, okay, great. Okay, so at the high level agenda we'll go over today is just discussing that, defining your strategy, regulatory overview, the internal steps that you need to achieve to go live with your initiative, how to partner with digital asset providers and clients, working with a fintech vendor if that is going to be something that you want to do as a bank, all the operational steps that you need to think about, the marketing steps as well, and what to monitor post-launch. So diving right into your strategy. So there are many ways a way can partner with a stablecoin provider or a digital asset client for banking services. And I know in some of the previous sessions that Lindsay has held or in the content that was shared, there's some more details on that. I provided some of the examples listed there so you can charge a reserve, the charge fees for the reserve that the stablecoin provider is holding with the bank. You can charge interest on those reserves, or the bank can essentially charge fees for the transactions managed. So I don't want to go into this in too much detail because they have been covered, but it is critical for the bank to identify how do you want to enter this space, because that use case and that strategy is going to essentially drive all the execution steps further down the line. And it doesn't mean that you can only do one thing. You can obviously enter one way and then scale up and evolve your offering. But it is important as you go through the regulatory approval and the internal approval to know exactly what you want to do, because that is going to determine the level of effort required, the technological resources required, and all the other resources required. And obviously this goes without saying, but for any bank, as you enter the space, you also need to think about the economics of the use case and how the bank will essentially make money off of that. So just creating a business model, a P&L, or just creating some sort of like revenue model that you want to follow will be critical, especially as you get internal approval. So now that you've created your strategy, what are some of the 4 critical things to look out for as you plan to go live, to launch? So I'll go into these into more detail. So let's start with a regulatory review. What I'll say here is you want to be very clear with your bank's regulator what it is that you're looking to do. So going back to what I was saying earlier about your strategy, knowing what your strategy is going to be is critical. Would recommend that you speak with them frequently and often, even if you're just thinking about it first, speak with them. I know each bank has, they have different regulators, each state has different regulators. They all vary in their approaches and how conservative they are. It could also have to do, with your bank's history. So speak with them frequently as often. The regulator a lot of times will have a say on what you can and cannot do. So knowing that early up front is going to help you make sure that you allocate your resources the proper way. Also, some regulators may not be comfortable with new technology, so keep that in mind as well. Blockchain technology is a new technology, even though it really isn't that new for that space, but for some regulatory bodies, it seems like a new technology. So they may need a little bit more hand-holding to bring them sort of along with that journey. So here again, the regulatory landscape is very complicated, and it varies by state and by bank and depending on the bank's history. So, and obviously there are people and resources that can drive you into much more better detail here. But what I will say is speak with them early and frequently. And most importantly, if you change your strategy, if anything changes after launch, let them know, disclose it to them along the way. Going into internal review and approval. So every bank has its own process to approve a new initiative. And I know from bank to bank, it sort of varies in how that goes. There's an internal body that typically will review and approve, the initiative and just make sure that all the boxes are checked essentially to prepare for that. There's a risk management committees in most banks that handle that as well. So be aware of your bank's process. And I would also say start this process very early internally. Given that the digital asset space is new and it can seem risky to a lot of banks, I would be prepared for internal friction and just give people enough time to voice their concerns so you can address them. So I would also say the internal teams, similar to the regulators, they will want to know the use case in detail. So you will want to document the process flow, what it is that you're looking to do, and then you identify all the tech components, all the operational components along the way, because that is when you'll need the other bank resources to come and help you get this thing off the ground, essentially. And you'll need to satisfy all parties for approval. This is just a list of examples, but it varies from bank to bank. So you'll obviously need to have the initiative economics, how you expect to generate revenue, what are the expected costs here. ESA, AML, KYC are also going to be critical. Your bank's information security, they're going to have, requirements and other questions to answer. System architecture will have a say in this as well. If you're going to involve operations and servicing, they obviously need to be involved along the way, as well as marketing and sales. I would also suggest that it's best to have a dedicated resource to manage the project and the product. So you can have a PMO, for example, to launch something, but it's important to have product managers to manage the product post-launch, and we'll go into the post-launch activities. It'll be important to have people dedicated to this initiative if your bank does not have that right away. Would also recommend to align with the internal team on a cadence for reviewing the initiative to get approval. I know every bank has a different process for this. Maybe they'll meet, every other week, every month, every week. You determine what's the best cadence, but if you feel like you're getting a lot of questions and a lot of friction, then making those meetings more frequent will only help you essentially identify the gaps early on and take the steps along the way to close those. Otherwise, the process could just take a very long time. And the one thing that I'll call this out now, but I think will become apparent throughout the presentation, is that as you go through each step, it's inevitable that you will find that you will need new resources for this thing or that thing. It could be a marketing resource, operational resource. So, and obviously that's a cost that you need to also take into account in the initiative. So this is critical to call that out and plan for that early as well. All right. So now going into what I think is probably what most of you are interested in hearing about is how do you partner with a digital asset client? clients. And notice that I'm using different language here from the title of the deck. It's not necessarily just a stablecoin provider. This could be any entity that serves in the digital asset ecosystem. So it's important to have someone in your bank that gets a good understanding of that. You have different providers, you have stablecoin providers, you have, market makers, you have different types of entities that serve as an ecosystem, and they all interact with each other. You have exchanges, obviously. So using the term here broadly, because it obviously does depend on what your bank's strategy is in working with these clients. But if you're looking at the bank and the client type, obviously the bank here, what they're doing to assess the prospective client is they're seeing what is the potential risk that this client presents, and also what is the business opportunity, right? The client, on the other hand, what they're looking at is they're looking at what are the services the bank can provide versus what they need. What is the bank reputation? And most importantly, what are their tech capabilities? And maybe it's not most importantly, but it's very critical to them, probably more critical to this type of client than your traditional commercial client for a bank. So looking at this into a little bit more detail, when it comes to banking these clients, when you're on board, you're going to have to think about your onboarding process and approving these clients and as well as monitoring. So maybe your bank is not currently approving and onboarding this type of client. So that will need to be addressed in your bank's processes and procedures. So what is that process to approve them and review them? What are the criteria you're going to use? What is the bank's risk appetite? You're going to look at different entities based on what they do, how they fit into the ecosystem. Are they domestic or are they international? What is their size and maturity? These are some of the variables that your bank's onboarding team will need to think about, and they may be very risk averse, at least initially, and then maybe expand a little bit as they get more comfortable with the space. But that's going to be a critical step to onboarding a new type of client. And obviously this goes with any other type of industry that your bank is going into that it hasn't gone into before. You want to prepare for this as well. On the flip side, this type of client will want to know how long does it take. So once they hand over all their documents, they want to know how long will it take until you're approving, until I can, deposit something with you guys. Is it going to be a month? Is it going to be 3 months? It's important for them to know that because they need to plan for as well. And obviously the onboarding is not the only step here. We also need to monitor these clients' activity after onboarding. So think from a, like BSA, KYC, AML perspective, you need to manage transaction and activity monitoring on a regular basis, on a live basis sometimes, and your bank might require additional resources and technology to do that to meet these demands. Then going into the client technical integration. So let's say you've approved the initiative and you have onboarded a few clients. Now they want to integrate with your technology. And first, I just want to clarify what I mean by that. So let's just say you are going to provide just very basic payment services to the client. I'm going to use a very simple example, wires and ACHs. And they obviously want to transact with the bank. So it's critical first to understand what does the client need and tech requirements at the outset of the initiative, and it helps your bank prepare. I would recommend actually identifying a few sort of pilot clients from the beginning of the initiative to identify this need. This type of client is very sophisticated, unlike sort of like your typical commercial client. They prefer to do everything via API. That means your bank needs to have API capabilities. You'll need client-facing APIs, you'll need a developer portal, and API documentation. Many of these clients will want to look at your API documentation before they even onboard because they want to make sure that your capabilities meet their need. It's not the other way around, right? Like they want to make sure that you can do for them what they need at the end of the day. And once that's done, then what they're going to do is they're going to assign people from their team to facilitate the actual integration, and it's development for them, right? So if you're not familiar with the development process, they will have engineers available and they'll give them, let's say, a few weeks to do the integration and the testing. So it's important that your bank also has resources assigned and available during that time frame, because if you go outside of that, then maybe the client's engineers won't be available and then you sort of miss that timeline. As far as the technical integration, the general steps is they would first connect in UAT. So this is a test environment. They do the full integration and they do many test transactions. They're typically testing for volumes, for limits. Like they're looking to see, okay, what would the real life scenario look like? They try to imitate that in the test environment. This could last up to, it could be a couple of weeks, it could be a month. It depends on the client's, their test scenarios and what they're trying to test for. But you also, on the bank, want to use this time to also test as well to make sure that your capabilities can meet the client needs, especially if this is a new capability for your bank. And once then they're satisfied with UAT, then they're going to repeat the entire process in production. So it's a whole new integration in production and they go live. So again, this can take about a month. So it's not something that is done, immediately and quickly. So just keep in mind that, resources are critical from both the client side as well as the bank side. And as I mentioned, if the capability is new to the bank, I would recommend piloting first with a few clients because again, you're also testing your capability live in market versus we all know that, doing something in production always, highlights new use cases and from UAT. So it's important to sort of learn identify any issues that you may have and work them out with a small set of clients, and then you can expand from that point forward. And going into the next slide, this is only if applicable. So for example, let's say you're creating such a capability for this client and you need to work with a fintech vendor to provide a service because let's say your bank doesn't have a capability. I think most banks, if they don't have something, homegrown, they will partner and buy technology, licensed technology from a vendor. So that's what this applies to in case you're doing that. Here I would use a general, guidelines on how to work with such a vendor. There's typically a bank process to vet and approve such a fintech provider. So like a third-party review process. Again, keep that in mind for your overall timeline as well. If you need such a vendor in order to provide these services to this client base, then you need to bake this timeline into integrating this vendor into onboarding them into your overall timeline. So just keep that in mind and plan ahead as well. But obviously, if you have a provider that is newer to the industry, there's going to be some additional sensitivities that your bank will have. How long they've been in business, what their financial profile, do you have a plan B in case their service, for some reason goes dark? These are just typical things to think about as your bank is working with a fintech vendor or provider. And you also will need to keep in mind your system requirements and resources for the integration, like how the data flow, what are the system requirements that you have, is it API versus file transfer? And again, your bank's resources for that integration, right? So you have the integration with the vendor, but you also have the integration with the client. So again, just keeping in mind that resources on the bank side here will be critical to making sure that you meet those timelines and deadlines. And moving on to sort of beyond the technical side of it, the operational side is also very important. The operational side will very much depend on what it is that you're looking to do, right? So going back to that initial use case, what is the use case, what it is that you're looking to do. But you'll want to define clearly how to create the entire operational procedures for the initiative end to end. And again, this will depend on the exact use case, but just some examples to think through. The process to onboard clients to the bank, right? How about maybe if you need to onboard them to a platform or a system or a new product, what are the KPIs you're going to track? How long does it take to get them onboarded? The API integration, well, that process needs to be also documented. You need to have operational procedures ready for that as well. Doesn't you think about servicing? So let's say you're creating an entire, new vertical with a new type of client type. How do they prefer to be serviced? Do they want to, call a number? Do they prefer to go to their client managers? Maybe a combination of both. Maybe they call the number for one type of thing, but then they call the client manager for something else. Just defining those roles and responsibilities within the bank early on will be critical because you also want to make sure your client is fully covered when they need something. And for this client base, SLAs will be very critical. They're typically operating and transacting 24/7. So if an issue arises, that could be detrimental to their business. So you want to make sure that you have resources that can also meet the needs that they have. And as any bank, you'll need to create, but also maintain detailed procedures as you go through this process, and those will evolve and change as you learn more about, the product and how this is being received. Something else to think about is marketing, or maybe more specifically sales and marketing. You want to think about early on how you'll market and sell the product. And again, it depends on what it is, right? Like, what's your strategy? What are you trying to sell? Are you just trying to bring on clients for deposit? Or are you trying to do more? And as I said this throughout the presentation as well, I would consider piloting first to learn and smooth out the process and to see, okay, what's the best way to sell here? It may be best to maybe market initially through a direct sales team. I think that works best with commercial clients. You want to assess the knowledge and expertise the sales team has in the space in your bank. If not, if you don't have that in-house, you may need to, again, bring in those resources, the salespeople to understand the space and understand the ecosystem. And they will require collateral, right? The marketing collateral, they'll require a sales sheet, they'll require presentation decks, they'll require training resources. You need to train them. Oftentimes, you'll need to bring in someone from technology side or maybe the product team to join client meetings to do sort of like the technical demos and answer any technical questions they may have. These are just some of the resources you want to have available for your sales team for them to be successful in going out and speaking with clients. And then as you mature in this business, you may want to think about sort of like digital marketing beyond that. This can be a fast follower. So you may want to add some information on your bank's website. You may want to think about digital outreach if you have that sort of footprint and network. And you may also want to strategically use press releases and case studies in partnership with the client. And obviously they'll need to agree to that as well. And this needs to be obviously very thoroughly thought through. So let's say you launch. Congratulations, you have launched. So what are the things that you should be looking out for after you launch? Overall, I would say you want to monitor the initiative holistically and adjust as needed. So any new initiative, you want to monitor what's working, what isn't working, what maybe was missed initially that you want to supplement that for. So you want to be very hyper vigilant in the beginning and expect that you have missed something. It's very common with any new initiative. And just make sure that you can jump quickly and close any gap that are identified. You want to be nimble, but also move very quickly. And obviously, you want to monitor business performance. You're expecting X amount of deposits. How are you performing compared to that? What could you, the sales team, marketing team, anyone do to help out with that? These are typical that would go with any new initiative for a bank. I would also highlight some areas to focus on that are more specific to this type of initiative or client. The client onboarding process and timeline. Again, because I mentioned earlier, here the bank would be onboarding a new type of client. So is there anything that is delaying that process, and how can you help facilitate that and close that gap? The client technical integration and timeline. How is that going? Is it going according to plan? Do you have any issues or complaints that are identified? It's important to identify any issues and adjust them quickly and early. And also, as you go live and as you have a lot of volume going through your bank, you're going to identify some tech capabilities that you may not have currently, right? Maybe like a volume or some other capabilities that you need to manage all the transactions that are going through. So identify those tech capabilities early on, and you need to start putting a plan in place as far as like when you will launch those. You're going to have clients that say, until you can do X, Y, Z, I cannot bring more volume over to you. So that's critical for you to prioritize those enhancements in order to bring that additional business. So you want to create and manage a clear roadmap, and just make sure that, if you say to the client that we're going to launch this thing in a month, that it launches in a month, right? You want to maintain that credibility with your client because they rely on you at the end of the day to transact. Something also very specific about this space is monitoring external factors. So given the novelty of the space, and everything, it's happening so quickly, right? It's changing so rapidly. I would monitor all external factors. So think about regulatory factors, domestic and international. Many of these clients operate internationally as well. So what's happening, outside of the US is also very critical to them. So it's important for you to be aware of that. What is the evolution of the tech capability? So we see a lot of change in the tech space. So what's changing there, and how does that impact your business? As well as the competitive landscape. What are other banks doing? Large banks, small banks, fintech, what are they doing? It's important to know this because, like I said, this space is evolving very, very rapidly, and you don't want to fall behind at the end of the day, and you want to take advantage of something that's happening. Based on all of these, you want to continuously refine the product strategy. You want to refine your sales and marketing strategy, your systems, and your operational processes. So like I said, it's an iterative process. It's never sort of like one and done. It's a continuous evolution. And you should want to communicate internally and to regulators as things change, as you make these changes. So that is essentially what I had prepared. Would love to see if there's any questions that I can take and answer. Either in the Q&A box or no.
If you could raise your hand if you want to ask a question. Okay. Divakar, go ahead.
Yeah, thank you for this great presentation. I just had a question around what are you feeling are the bank's willingness to adopt the new technology, like you mentioned, writing these into like a smart contract or writing it into the blockchain. Are they open to those ideas, or what are they looking to see as like a metric to say go or no go?
So can you just explain, like, can you just explain your question a little bit more?
Yeah, sure. So I'm thinking about scenarios where, like these transactions need to be, like, these payment transactions need to be recorded in a blockchain, for
Yeah,
example.
yeah.
And how willingness are the banks willing to change, go from the traditional model into a blockchain environment to, make it easier for viewing
Yeah.
these ledgers.
I think it varied, like I said, bank to bank. And, I think there's an interesting breakdown. You can research this on your own to see which banks are going into that space or not. I think the fact that some of the larger banks that we're seeing are embracing this technology, they're sort of taking the lead here. And I think that leadership thought process is sort of making the other banks also think about, like, okay, I do want to go into this space. At the end of the day, I think banks want to provide services to the client. I think there's a strong appetite for banks to enter this space, but obviously they're very risky. Blockchain in itself is pretty benign, right? Because it's immutable. You're recording transactions, in a way that, it can't be deleted at the end of the day. So that's pretty benign. So I think the technology itself, I don't think it's scary per se, but I think banks in general are a little bit reluctant to go into something they've never done before. However, this payment type, what it does is make all these sort of like older payment models obsolete or maybe less used, and they're very expensive and they're clunky. They take forever, right? Sending a wire takes 3 days or something like that. So I think if there's a push coming from the client, the banks will follow. Maybe that's a better way to answer that. And I think the fact that the larger banks are embracing it is also sending a very clear message to the rest of the banking world, like this is where the industry is heading. So it's important to jump on board.
Perfect. Thank you so much.
Thanks.
If you have a question, just raise your hand.